Hi all. So today we are going to start discussing about our Unit 1 Introduction to Business Economics. So what is business economics? That is the first thing which we are going to discuss in this module. Before that, I would like to discuss with you the syllabus. So the first module is basically the things which we are going to discuss is what is business economics, its meaning, its characteristics, what's the difference between business economics and economics, scope of business economics, uses or objectives of business economics, roles and responsibilities of business economists. And the second part of this first unit is macroeconomic concepts, where we'll be discussing about what is inflation, what is deflation, what are the concept and measures of national income and output, gross domestic product, that is GDP, national income, gross national product, and business cycle and its various phases. So let's begin with what is business economics, its definition, and the basic features. So before beginning or before moving on to what is business economics, we'll start the module or the session with what is economics. What is the economics? It is basically, as you all know, it's a study of production. It is basically all about consumption of goods. It is basically transfer of wealth, anything which is associated with money or which is associated with economy. So it explains how people interact within markets to get what they want or accomplish certain goals. So basically, economics is something which is related to market, something which is related to economy, and something which is related to wealth, production, as well as the consumption pattern. So basically, economics is a driving force of human interaction. So basically, it studies often reveals why people and government behave in particular way. Okay, so basically, there are a lot of eminent scholars who have given definition for the concept economics. So we are discussing two definitions. One is given by Alfred Marshall, another one is given by Lionel Robbins. So according to Alfred Marshall, economics is a study of mankind in the ordinary business of life. It examines the part of individual and social action which is most commonly connected with the attainment and use of material requests of well-being. So that is a definition given by Alfred Marshall. So according to Lionel Robbins, a British economist, economics is a science that deals with the study of human behavior as a relationship between ends and scarce means which have alternate uses. So there are mainly two types of economics. One is macroeconomics, and another one is microeconomics. So what is macroeconomics and what is microeconomics? So macro means it's a larger picture or economy as a whole, whereas micro means a particular individual business firm. So micro means it is narrow or it is related to an individual firm, whereas macro means the economy as a whole. So that's the difference between microeconomics and macroeconomics. So microeconomics basically it focuses on the actions of individuals and firms, like the dynamics between buyers and sellers and borrowers and lenders, whereas macroeconomics, as I explained to you already, it's basically a broader version, whereas it is basically analyzing the economic activity of an entire country or the international marketplace. For an example for this micro and macro, so it is basically when it comes to a particular firm, it is micro, and when it comes to economy, it is macro. So the concepts related to inflation, deflation, even gross national product, gross domestic product, these all are macro in nature because it is actually related to the economy as a whole, whereas the concepts pertaining to the demand analysis, supply analysis, consumer behavior, etc., pertaining to a particular firm is micro in nature. So in this regard, we can consider business economics as micro in nature. Okay, so what is business economics? Is basically it is a practical application of the theories of economic concepts. So business economics, there's another one more term for that particular concept. It's called managerial economics. So it is an application of economic theory and methodology to find out solution for the business problems. It deals with the issues such as business organization, its management, expansion, and creation of various strategies. So it is basically in simple way, it's an application of economic theory to the problems of management. So it's primarily concerned with the applicability of economic concepts and analysis to decision making in business. So when we say business economics is another word for business economics, that is managerial economics. So business economics is particularly having two business processes. One is decision making and another one is forward planning. Decision making is always deciding on what to do next, the current activities, what is to be done. Say, for example, your company is having a particular issue with regard to the sale of your product. So, what can be done? What are the decisions to be taken right now? Whereas forward planning is basically it is a prediction or forecasting for the future. Say, for example, right now for the past 5 years, this particular company's sales is this much percentage. So, with this particular figures, with the help of some calculations, business economics or business economist, who is a person responsible to do this analysis in a business organization. So they will be basically indulged in calculating or forecasting for the future sales. Okay. Say, for example, this much percentage of sales happened in this particular company for the past 5 years. What will be the sales for the next year or next to next year? Okay. It can be found out with the help of certain calculations. And based on that, futuristic sales, business entrepreneur can actually prepare the resources. So business economist is actually helpful in this regard. So the basic two business processes which a business economist or which can be done with the help of business economics is decision making and forward planning. So there's one definition for business economics which is coined by Spencer and Sigelman. So according to Spencer and Sigelman, business economics is integration of economic theory with business practice for the purpose of facilitating decision making and forward planning by the management. So what is business economics according to Spencer and Sigelman? It is an integration of economic theory with business practice for the purpose of facilitating decision making as well as forward planning by the management. That are the basic two business processes of a business economist, that is decision making as well as forward planning. So that's a definition of business economics. Then we will discuss certain features of business economics. So what are the features of business economics? So business economics is basically, it's a new discipline and of recent origin. So it's a separate branch of economics which is micro in nature, which deals with an individual firm. Okay, and ever increasing and changing of human wants and existence of limited resources. So whenever we discuss about economics, we can say that available. So managing with the available resources. So resources are scarce, and how we are properly managing with the uh, limited resources. So why we are discussing, why we are studying a subject called business economics for a BBA program is also basically you all are going to be budding man. So you all are aspiring to be managers, or you wanted to start your own business. Some of you want to work as managers in different MNCs. At the same time, some of you wanted to start your own business. In both the cases, you wanted to calculate or you wanted to find out certain areas. So you wanted to find solutions for your business problems where the concepts of business economics or economic concepts will facilitate you for the same. So thus a new branch of economics called business economics emerged because the reason is ever increasing and changing of human wants. As human wants are unlimited, wants and needs are unlimited, and we have limited resources. So how to cope up with that? So basically before a business entrepreneur produce something, they will be properly analyzing what to produce, how to produce, and where to produce. So business economics is highly specialized subject and a separate branch of economics like public finance, agriculture, economics, etc. So business economics is purely related to the economic activities and problem solving solutions for a business enterprise. So business economics is micro in nature. I have already explained to you. Micro means it is related to individual firm. So it deals with the study of an individual firm. The business manager is concerned with the problems of his business unit rather than economy as whole. So that is what is another feature of business economics. Business economics is pragmatic. What is the word meaning of pragmatic? It's practical. So obviously from the definition itself, we can understand, we already understood that it's the integration of economic theory with business practices in order to find out practical solution for the business problems and to facilitate decision making and forward planning. So business economics is practical in its approach, so hence it is pragmatic in nature. It's a normative science. Okay. So what is normative science? Business economics is a normative science rather than a positive one. Normative science means it draws conclusions based on facts and figures, and it is judgmental in approach. Okay, basically, as I already given you an example of predicting the future sales, right? So simply they cannot predict the future sales. So based on the current 5 year sales of that particular company, or whatever data available, we are or business economist is predicting the next year's sales. So basically, that is what is business economics is a normative sense. It always finds the facts and figures and calculations are done based on this facts and figures. Then business economics is science of decision making. That's another feature. Obviously, business economics reduces the gap between the economics and business management and thereby help the business manager to take a better decision. Decisions regarding what to produce, how much quantity to produce, okay, or how much, say, employees labor required for producing this much quantity. So what is the current demand? Okay, so when through demand analysis, we can decide on the quantity to produce. Then it is a study of allocation of resources. Business economics is a study of allocation of resources. That is, as we already discussed, human wants and needs are unlimited and the resources are scarce. So when the resources are scarce and when the resources are limited in supply, we should decide properly where to allocate these resources. And obviously, another feature is it is related to other subjects. Business economics cannot stand as a separate, even though it's a separate concept, if its functionality is to be fulfilled, it should associate with other subjects like statistics, mathematics, accounting, etc. They'll get the help of this other subjects also to find out the solutions for the business problems. So we have discussed few features or characteristics of business economics. First is it's a new discipline. It's a separate branch of economics. It's micro in nature. It's pragmatic. It's a normative science. It's a science of decision making. It is a study of allocation of resources. It is related to other subjects. So these are other features of business economics. So that's all for today's session. So thank you all for listening. Thank you.